Hello everyone, I am Ankit Kanodia, founder of SmartSync Services, a SEBI registered investment advisory firm based out of Ahmedabad. Welcome to the sixth episode of Leaders Ka Falsafa. For those who are joining for the first time, Leaders Ka Falsafa is a new initiative of Mission Smile where we call top management of listed businesses in India and deep dive on into their businesses and their journey. Mission Smile for newcomers, I would just like to repeat, stands for making new stock market investors learn it through engaging research. More than 7,000 investors have benefited from our various initiatives in our Mission Smile community. Today, for our sixth episode of Leaders Ka Falsafa, we have with us Mr. Akshay Modi, the Joint MD of Modi Naturals. Let me give you just a brief, because many of you are not aware much about the company. So let me just give a brief intro. Started with humble beginnings and just with a single edible oil factory in Punjab in the year 1974. Today, Modi Naturals is a 500 crore market cap, listed on the Indian Stock Exchange, and have three distinct divisions of bulk edible oil, FMCG division, and ethanol distilleries. So without further ado, I will welcome Mr. Akshay on our platform. Mr. Akshay, if you may share an opening remark and then we can straight away move into the Q&A session.
Thank you very much, Ankitji. I really appreciate the great work you're doing for the investor community. And I also thank all the investors who have joined us today, and especially for taking an interest in our company. And as Ankitji said, the company is on a great growth trajectory. So it's really wonderful to get so much interest. And I'm happy to tell everybody about our story through your lens today. So thank you once again for having me.
Sure. Thank you so much, Akshayji. So I'll start with my first question. So let's start from the beginning. I believe you joined the business in 2010. Before that, Modi Natural was primarily into producing bulk oil for major FMCG players. I think the FMCG division was started soon after you joined. Take us through your initial days, maybe your struggles and success during the early 2010s.
Sure. I mean, I'll go a step earlier than that also. So I'll just tell everybody about myself. I grew up in a small town in UP, in Pilibhit district. I don't know if anybody has heard, but that district is now getting popular for its tiger reserve. I don't know if anyone has heard of it. But I grew up there and I went from boarding school to boarding school. I finished my schooling from Blue School in Dehradun. Subsequently, I did engineering in the UK and I finished in 2007. And after that, I came back to India because I thought there was a lot of opportunity here. And I always had an entrepreneurial mindset. But initially, I worked in consulting for 1 or 2 years. And when I really understood, how to formulate business strategies and also how to execute them. And that has helped me all along. Thereafter, when I joined the family business in 2010, we were basically a pure play commodity company. With facilities to extract, refine, and sell bulk edibles, primarily rice bran. And in the very first phase when I joined the company, it was a very obvious thing that new generation has come, so we have to set up one more factory. So it started with that thought. I had even purchased land, to set up a new factory, but I thought this is not what will really help us grow as a company. To further expand in the commodity space at that time. So then we shelved that idea. I came back and did some brainstorming and thought that, we should have our own brand and get into the consumer space. But, it was very challenging because let alone having our own brand, we didn't even have bottling for other brands. So it was purely a bulk, tanker sale sort of a business. So from setting up a packaging unit, starting with bottling for other brands and then launching our own brand and trying to decipher this whole think of what is a brand, what is a product, what is product differentiation, and how do you firstly differentiate a product and then get into the emotional part of a consumer's mind, and that's why you transform from product to brand. So this was the journey we have seen, and it came with these challenges of packaging quality, and we faced all these issues where we faced oil leakages and things like that. So we've been through all of that, but fortunately, the management. My family, of course, my father was heading the company. He was very open-minded, and even the rest of the management. They were like, once we've taken a decision to do this, then let's go the whole hog. And I think that's been the biggest support.
Great. I think maybe you can adjust your audio a little bit, or maybe it is my internet connection where maybe your voice is coming a little lower.
Can others hear me? So maybe we'll come to know whether it's an issue with your network.
Okay.
If somebody could just put it in the chat box, whether they can hear me or not.
Yeah. Is the audio okay for everyone when Akshay ji is talking? Okay, great. So thank you so much, Akshay ji. So I'll move on to the next question, which is sort of a taking forward to the previous question itself. So B2B transitioning into a B2C is not something new. Many businesses have tried this in India. However, very few have managed a transition in terms of scale and margins. You have managed to scale it up in 10 to 12 years from practically zero to 140 crore of sales in FY24. And with EBITDA margins being north of 10% now. What is the secret sauce here? And what you think has helped you in a big way in terms of scaling it up and also maintaining the margin as well? And how do you see it qualitatively today? Plus, how do you see the business going forward from here?
That's a very interesting question. If it's a secret, then I won't tell you. But you see, there's no secret to it. I mean, essentially, we are a young company. We are almost, we have the energy of a startup, but with traditional values. So we have developed a profitable business model with very specific, product and brand differentiation, and coupled with our backward integration as well as the distribution network we have built, we've developed a profitable model. Most startups where they start when they come up with an idea, okay, that this product is great, and then they test it out with some friends and relatives, and then they go into the market. But they don't really understand, what are the barriers to entry. They don't look at what are competitive advantages. They just go with an idea. Whereas here, over the years, we've developed a business model which works on principles of competitive advantages. And I can take you through that in the rest of the conversation today. But essentially, we picked a segment within edible oils. We wanted to go premium because we didn't have the bandwidth or the wherewithal to fight in the mass segment. So we went niche. Within niche, we created products which were differentiated and sort of developed our own subcategories. And then we backward integrated as well, developed enough scale to be able to backward integrate within a niche category to maintain margins and use those margins in advertising and distribution, and then develop a bit of a moat around it. So this is the secret.
Great. So I'll go further deeper into this FMCG business first before I move on to the other businesses. So I think Olive brand is your star brand, and this is a brand that sells a host of olive oil products which you make. So tell us something about how it got conceptualized. And before going ahead with this, I'm sure you would have tried many other products. What worked, what didn't, and what made you zero in on the Olive brand?
Yeah, absolutely. You're right. So we had tried other products as well. In fact, back in 2011, when we had conceptualized that we want to get into consumer business, we had obviously started with rice bran oil. We thought this is our own in-house product. So why don't we launch a brand of rice bran oil? And today, of course, consumers know what is rice bran oil because of some market leaders doing a lot of marketing around it and developing the category. But in 2010, nobody knew about it. So our first obvious choice was to launch a brand of rice bran oil. And then, since we were struggling with the initial strategy, we also took on board a consultant who was ex-FMCG MD for many years. He was retired from one of the leading FMCG companies. And he sort of handheld us through the process. And what we soon realized is that if we were going to launch a pure rice bran oil brand, we would be faced with a double whammy. First, we would have to create a category. And then we would have to create product differentiation and then a brand. So it's like a triple whammy, so to say. And since it's a commodity category, there's very little room for product and brand differentiation. We very soon realized what is the difference between a commodity and a product and a brand. So this is what we learned. And then we went about developing this concept of multi-source edible oils, where you differentiate your product by adding different oils, you layer it with some consumer benefits or cardiac benefit or active, etc., etc. And olive at that time, of course, we found a gap in the market where there was no such brand positioned around the business of olive oil for India. Of course, during my travels and my education abroad, I had seen similar sort of spaces in this category in other countries, but in India, obviously, that space was different. So we quickly picked that up, and then we developed a whole product portfolio and strategy around that. And of course, we have multi-source oils, and then over time we developed enough volumes to backward integrate and have a competitive edge even in pure olive. So we sort of started both these subcategories.
Right. So since you were talking about blending different oils, I'll just move further into it. As in, we were talking about olive brand, and I would like you to spend a little more time on olive active, its mix, its attributes, and its business characteristics. What is the competition in this segment? What are your margins here? And do we have any pricing power in this particular product?
Sure. So, I mean, olive active is a mix of olive oil and rice bran oil. And in the early days, our idea was to basically, olive oil used to sit on a gourmet shelf. I don't know if you recall back in the day. वो supermarket में it used to be kept separately. Even if a consumer purchased it, वो घर में जाके they used to just put it on the top shelf. And on Sundays, you would pull it out to make your omelette. So our idea was to position it, package it, and price it like an everyday cooking oil in India, like the other cooking oils in the world. Like to name the brand. So we developed a blend, and then the ingredients we chose in the blend was such that they were suitable for Indian cooking. One of the barriers was that olive oil में Indian खाने में taste नहीं. So we cracked that. We solved that problem for it. Similarly, we priced it accordingly and we packaged it. So we came up with these 1 liter pouch packs with 5 liter jars. So that is olive active. And then if you look at competition right now, there's nobody else in that category. We've developed a niche for ourselves. And if you look at pricing power, I mean, since there is no competition, our competition with this is with ourselves only. So, if we choose to increase price beyond a point, then, volume growth becomes a challenge. And that's with any FMCG category. And if we go lower down, we would compromise on the margins, but we would be able to increase volumes. So this is a strategic call that we take from time to time. And then there's seasonality also, around some festive seasons, we choose to give some, consumer offers and all that for better uptake, so on and so forth. So if you say pricing power on its own, of course, we have a decent amount of pricing power, and we operate at decent margins. I think our gross margins in this product will be upwards of, 40-45%, which is unheard of in edible oil. So it's pretty much moving like an FMCG product, and no competition. I mean, no direct competition. There's obviously indirect competition in multi-source edible oils, but in this category.
Okay, got it. So in our FY24 annual report, we have shared a good image of the whole value chain of edible oil. First, there is a commodity-based oil like soybean, mustard, and sunflower oil. Second is the premium multi-source, where you have a mix of rice bran plus olive. I guess we are in this range right now, the premium category. And the third is the super premium edible oils like pure olive or canola oil, right? So I would like you to share about all three segments in terms of some idea on the market size, competition, pricing power in all these three segments, and margins in general, if you can.
Sure. I mean, we are present at the top 2 tiers of this pyramid. The bottom would be commodity. At the commodity level, I think India would be about a 24 million metric ton market, which is huge. You're looking at, almost $3 billion market. And if you look at the middle tier, which is basically where we are, which is the multi-source edible oil, this is roughly about a 3,000 crore market with market leaders from Marico, Agrotech, and ourselves. There are pretty much these 3 players. And then the top tier is the olive oil and canola oil market, which is roughly about a 1,000 crore market. And we're present in that segment as well. And over there, we have backward integration where we are the only manufacturers in India. So we've developed a refinery on olive oil. We have got technology and know-how from the Mediterranean region, and we've developed it.
So, out of this 170 crore turnover from the consumer business in FY24, I guess 90% is from edible oil products and the rest is from food. As we aspire to become a reputed and scalable FMCG player in the long term, how do we see this mix going forward?
So I think as with most things in our portfolio, I think 70-30 is a good ratio in the medium term, where at say, let's say about a 500 crore top line, we should be doing, let's say, about a 300-350 crore from oils and about 150-200 crores from foods. So I think this is something that is achievable with the product portfolio that we have.
Yeah. So we had a lot of discussion on the consumer business. Now I'll shift to our newest segment, and that is the ethanol segment. So before we deep dive into the segment, it would be great to know how this idea got your attention. Is it because of favorable government policies, or because the value chain was similar to our rice oil brand business, or something else?
Very interesting question. How it caught my attention was back in the day, my father had developed technology to isolate rice bran wax. So rice bran wax is a byproduct of our refining process, and normally it comes out with a lot of oil content still remaining, and it mostly goes for soap making, saponification. And so we had developed a technology back in early 2000s to isolate and to purify this wax to a 99.99% purity rice bran wax. And this wax, we are the only manufacturers in this category. It's basically a replacement for other waxes like Carnauba and Montana wax for paper coating and edible. So we used to use a solvent there, which was an alcohol, like isopropyl alcohol, similar to ethanol. And we were facing problems with the reuse of that. With the spent solvent, we were facing problems, the purity would go down. So I was planning to get a rectifier column, a distillation column for that. And this was in early 21. And during that process, I chanced upon this whole ethanol scheme. And then once we researched the entire project, we realized that there's a lot of synergies between this and what we do. And of course, the favorable government policies made us just jump right in, and it was a good opportunity.
Right. So I'll again go back to your latest annual report of FY24, where you have very well articulated the ethanol business strategy. Some of the things that impressed me was the carefully selected location, that is Chhattisgarh, where our key materials, rice, maize, and husk is available all around the year. And it would be great if you can just expand a little more in terms of what is our current capacity, incoming capacity, margins we expect going forward, and in general, our outlook of the business.
Sure. So our current capacity is 130 kiloliters per day. And as I mentioned earlier, the plant has now achieved optimum capacity, and we're trying to run it even above capacity. So it's performing quite well. We had some initial teething issues. We commissioned this plant in the end of October 23. And then it took us 3-4 months to stabilize it. But since April 24, it's been running quite smoothly and at optimum capacity. And in terms of margins, I've always maintained that, considering the geography and the raw material, etc., that we use, I think 10 to 12% EBITDA margin is something achievable in the near term. And in the first quarter, I think we've already achieved that, first quarter of this financial year. And going forward, we have already allocated 100 crore budget to expand this capacity to add another 170. So we'll be crossing 300 kilometers per day at the same location.
Got it. So now, normally I do not ask for specific guidance in our Leaders Ka Falsafa session. But since you have so clearly laid out your FY25 guidance on your annual report, I would request you to briefly take us through that. And with half of FY25 already past us, how confident are we to achieve those numbers? If you can just share.
That's interesting, because on the last call, I think you were there, people asked me the same question. So, but I had maintained that we intend to under promise and over deliver. And having gone past the 6-month mark, I think we are confident of crossing that figure. So that's why we gave this guidance of a 50 crore EBITDA number and a top line of about 700. So we're confident of achieving that. Hopefully, better things to come.
Right. So now, while I think you did not mention this in your annual report, I guess, but in the recently held Arihant conference, I happened to attend your session, and you said that we will either demerge or separately list the bulk oil business. Can you expand a little on the same and help us with the rationale and maybe some timelines?
So I think this was more in response to somebody's question that is this something that you have considered? And I had said that, while of course all these options are on the table and we are aware of these options, but right now the management has not taken any decision or given a view on this. Primarily because we were waiting for some of the new businesses to scale, and all these things can be done once there is some scale in the other businesses. So hopefully, I mean, in the near future we could do it, but right now I won't be able to.
So is it fair to assume that nothing is on the anvil in FY25?
No, nothing.
Okay, great. So based on our aspirations to achieve 500 to 700 crore of revenue from the consumer business in the medium term, how are we placed in terms of distributions, celebrity endorsements, supply chains, and all other pieces of the value chain? And how will that impact our margins and growth in the near term?
Sure. So I'll address your first question regarding distribution. So if you see the width of distribution, we are well distributed in all the channels. So we are present in, let's say, e-commerce. We are present in the emerging Q-com sector. And in e-com and Q-commerce, which is quick commerce, we are the leading players in our category. We have the highest market share. And if you were to pick up your mobile phone and apps today and search for some category keywords, we always fight to sort of stay on top. And if you look at the general trade, which we call the Kirana stores model channel, over there also we have a footprint across the country. And if you look at modern trade, which is the organized offline retail, we're present in all the leading retail chains in India. And we're also recently started operations in the army and police canteens. So last financial year, we got listed in the army canteens. And again, we have a unique product offering there, which nobody else has. So now we're present in sort of distribution width, and over time our depth will keep increasing as we get more and more we generate more and more consumer awareness and adoption. And recently we even started some neighboring countries which are giving us a good response. We started Bhutan, we started Nepal, and we will expand our international footprint as well going forward. So this is on distribution. As far as celebrity endorsements are concerned, over the last few years we've worked with several celebrities. We were with in a long-term contract with Lara Dutta. She's a very famous personality, and that contract this year, so we'll be looking at getting somebody new in marketing from time to time. So we'll be getting somebody new, and hopefully that will be revealed as early as in 2 weeks from now. We will really pretty much finalize it. And in the interim, we work with many celebrities, on social media campaigns. This quarter, we work with Chitranjana Singh, which is a popular name in households in India, so on and so forth.
Akshay, I think there is some, you need to speak louder because I'm getting some messages also from some of the participants. Maybe if you can speak a little louder. Earlier, I thought that it is because of me.
Okay, I'll go off Bluetooth. Let me just mute it for a second.
Yeah, no problem. No problem. No problem. You can take your time.
Yeah, is this better now?
Much better. Yeah, I can hear you loud and clear.
Probably causing the issue.
Yeah.
Right. So
maybe you can again expand on the celebrity endorsement part. Before that, distribution was
celebrity endorsements. We worked with Lara Dutta. She was Miss Universe. We worked with her for the last 4 or 5 years, and the contract ended this year. We're looking at now signing on somebody new, and we've pretty much finalized it. So let it be a surprise. I think in 2 weeks we will be revealing the name and the face, and the campaign is currently under development. And meanwhile, we've worked on a short-term basis with many celebrities. So if you go on Instagram and if you search Olive, you'll find a host of celebrities like Kalki Koshre, Chitranjana Singh, Sohali Khan, so on and so forth. So we work with a lot of film and TV celebrities over the years, and even product-wise. So right now, as we speak, we've shot an ad film with one of the celebrities for even our pasta category. and which we intend to scale up going forward.
Great. So in the near term, in terms of growth and margins, where do we see in this consumer business?
So in Q1, obviously, we've had a reasonably good EBITDA margin of 15% in the consumer division. And as I mentioned in the quarterly result, that we intend to increase our ad spends going forward in the next few quarters. But I think around 12% is something that we intend to maintain even despite increasing ad spends. So we intend to grow profitably.
Okay, got it. So now, Akshay, if you can throw some light on the working capital situation in all the three verticals. How are we placed? What are the working capital requirement in? Because all these three businesses are different businesses. I'm sure working capital requirement would be completely different for all three businesses. If you can just share some light there.
Sure. So I'll talk about the consumer division first. In the consumer division, our working capital cycle is roughly 50 days at the moment. And so, I mean, a lot of companies might have a longer working capital cycle, but we have purposely chosen to run our unorganized retail business completely on advance payments. So this is one reason why instead of going up to 60 to 70 days, we're operating at about 50 days. And obviously in organized retail, we do extend some credit. And by maintaining sort of reasonable inventory level, we're able to manage within 45 to 50 days. In the bulk edible oil business, it's kind of, there's a seasonality to it. So our season, because of agriculture cycle, it starts in November. And by March, April, we are carrying the peak inventory. So if you see the annual balance sheet, you'll see the highest working capital utilization in March. Whereas in September, we are almost at nil inventory. So if you look at the September quarterly result, the working capital is much lower. And in the ethanol division, again, raw material is available on credit as well. And OMCs pay in about 21 days. So you're looking at about a 30 to 35 day working capital cycle.
Got it. Got it. So moving on to some numbers from your annual report. So when I look at your FY24 balance sheet, I see 170 crores of debt. But when I match it with the interest cost in the profit and loss statement, it is just 8 crore. What am I missing? Would you be able to throw some light on that as to why the interest cost is so low compared to the debt on books?
Again, that's a secret. Okay, so basically in FY24, until October, the interest on the ethanol division has been capitalized as a preliminary and pre-operative expense, right? And about 105 crore of the debt came from that, out of 170. And in Modi Naturals, of course, our working capital limit utilization is not, if you average it out through the year, the utilization will be much lower. On 31st March, you see it at 170, but average of the year is lower. So that is the second reason. And the third reason is that our term loan in Modi Biotech for the ethanol plant, we get a 50% interest subvention. So while our interest rate is between 8 and 9% on a floating basis, 50% of that we get through the central government scheme. So we pay only about 4.5%.
Got it. So let me move on to the next question. Yeah. So this is on equity infusions. So we have had 3 equity infusion in our history. In 2010 at rupees 30, in 2018 at rupees 130, and in 2023 at rupees 207. And I believe given our expansion plan for both ethanol and consumer divisions, internal approval alone would probably not suffice. So we'll probably have to either take more debt or raise equity. I would like you to expand on this. What is our strategy here and what can investors expect?
So, I mean, as I've said before, we are open to both the options. We envisage about 100 crore capex for this expansion. And the consumer division is kind of growing on its own legs now. It doesn't require much capital infusion. Obviously, with a faster growth trajectory, maybe we can spend more. But since it's profitable now, we are only redeploying the profits from that. And the 100 crore capex, we feel that 50% of that we can fund from internal accruals. And since the project will take about 7, 8, 10 months to execute, there will be more internal accruals coming in. So with the balance 30 to 40 crores, we have the option to either take on debt or equity. So over the next couple of months, we will take a call on that. We are in no rush to do that.
Right. So now I'll take a break in the sense that I'll take a few of the audience questions. I have one question which I always keep it for the end, but I see two questions. So Rohit asked this, what is the risk in olive? Believe all olives are imported. How easily it is available? Are weather changes impacting olive planting and growing?
So this is a very interesting question. In fact, very impressive one at that. So since we are an Indian brand and we are origin agnostic, we can import olive oil. We don't import olive, we import the crude oil. So we can import the oil from whichever country has a good crop. So even if one country's crop, for example, Spain has a drought, which it did in the last 3 years, we can import from Morocco, Tunisia, anywhere, and our quality control and processing is all happening here in our refinery. So that is one aspect. The second is that we are kind of oil category agnostic as well. So because of the multi-source edible oils that we have three products there. We have a rice bran oil and olive blend. We have rice bran plus sunflower, and so on and so forth. So depending on the cost structures of different raw material sources, we are able to tweak the pricing and sort of push whatever we want to our marketing strategy. So we've developed a very robust portfolio of products to be able to traverse these seasonalities and variations.
Got it. I hope, Rohit, your question was answered. So the next question is again from Rohit. He's asking about the distribution depth going forward. In pure olive oil segment, it's imported brands that are competition. Are they keen on moving deeper into India? Is there a wide space for us in semi-urban India?
Sorry, I think we'll have to take them one by one. You lost me there.
Maybe you can read it on the chat box.
Yeah, okay, I've just opened it.
Distribution depth going forward.
Distribution depth going forward. So I've already mentioned that we have a good width of distribution, and sort of retail penetration, general trade will increase with growing consumer awareness. And as far as e-commerce and Q-commerce is concerned, we are present everywhere. And it's a constant battle for all FMCGs, even Nestle's of the world, where every year you want to increase your SKUs, you want to increase your shelf space. So that is a constant battle. And I also mentioned that we wish to expand our international footprint as well. And the next question is, in pure olive oil segment, it's imported brands that's our competition. I mean, yes and no. International brands, in fact, help us create the category. And since we are manufacturing here, we have the backward integration and the pricing power and the margins. So that helps us. Are you keen on moving into deeper India? Yeah, I mean, as the category grows, our distribution will keep increasing to more and more cities. But because we have lower price point, goodness of olive oil products like Olive Active, we are already distributing in, let's say, even tier 2 towns. So tier 3, of course, and beyond, we have not gone yet. Direct distribution, maybe through indirect distribution, or through e-commerce. Like, for example, we do get orders on Amazon, etc., from some really small town.
Akshayji, I think Rohit is asking, are the competitors, the international competitors, keen on moving deeper into India? That is his question.
That's a difficult question for me to answer about the competition.
Okay. And the last one, is there a white space for us in semi-urban India?
Yeah, I mean, with the portfolio of products we have, as I mentioned, as we develop more and more consumer awareness, we can keep expanding our reach. So semi-urban, we've already reached. Now, within those towns, distribution depth is something that we continue to grow.
Okay. So the next question is from Neeraj. Neeraj asks, I see Jaipur olives also in the high-end domestic segment. They grow olives in India as well. How is our competitive strength compared to them and compared to other brands like Bertolli, etc.? Are you also, you can answer this and then I'll move to the next question.
Yeah, so I'll tell you about the domestic olive oil production. It was primarily a joint venture between the Israeli government, the drip irrigation company, and Rajasthan government, and they formed this tripartite entity called Raj Olive, and they set up a plantation in roughly 500 acres or something in Rajasthan, and they produce about 10 tons of olive oil. And so 10 tons of olive oil relates to about 1 day sale of mine. So this is where domestic olive production is at. And as far as the international brands are concerned, we are playing in different sort of categories and consumer segments. While they may be targeting, very, very high-end NCCS A++ categories, we're targeting a slightly more wider audience with our product portfolio, with our communication, and even with the scale that we've achieved.
Got it. So, and Neeraj asked another question. Are you also considering category expansion, selling olives, sun-dried stuff in olive oil, etc.?
Yeah, I mean, we can consider all these things. We have considered it in the past, but every year we launch some new categories and we do pilot some. So, for example, this year we've piloted a powdered beverage, sugar beverage category under a new brand called Jinx. In Olive Kitchen Foods, we already launched pasta as well as peanut butter. So now pasta has gone into a scale-up mode where our pilots are successful and it's already sort of reached a certain run rate. And now with more distribution and awareness, we intend to scale up that category, and we are ready to now pilot one more category under that sub brand. So we could be looking at these categories, and soon we will be announcing.
Got it. I think we have covered all the questions on the chat. So I'll move to my final question to you, Akshay. So this is actually my favorite question, which I ask to all my guests here.
Oh,
where do you see yourself? So where do you see yourself and Modi Naturals 10 to 20 years from now? I mean, what is your vision for the real long term? I know you can't put a number to it because it is really long term, but it is more of an aspirational question as to where do you want you to see yourself and your company, and most importantly, what are the key risks you will also pay attention to while you go ahead working for that vision?
Of course, I mean, my ambition would be to have really good household penetration with our products, like the major FMCGs of the world or of India. And with that, of course, product portfolio has to expand. So let's say in 10 years, I would like to have a very, very good sort of product penetration brand and product penetration where much wider audiences consuming our products. So I would like to see it more from a consumer lens, and of course, results will follow on their own. That's for the consumer division. And as far as ethanol division is concerned, I think it's given us a very good opportunity to get into a new sector. And that presents a whole host of opportunities. So, as I mentioned, in the past that we are very, very good with even protein extracts. So our rice bran oil division over the years was profitable because our byproduct sale was very good. So we had developed a very high value protein byproduct. And that's the same thing we are doing even in ethanol. And we are doing value addition to the byproduct, which is an animal feed. And we're getting into high protein ingredients. So right now, of course, some of this is proprietary in nature. As and when it unfolds, we can announce. And over there, there's also opportunity to get into beverage, but right now we are not.
Got it. So I think there is one more question in the chat box. I'll just take that up since we still have time.
Sure.
So Rohit asked this question: oil revenues on an annual basis do not give a good picture of your actual growth. Reducing oil price can constrain revenues. Can we share volumes of oil sold?
So, I mean, we are giving segmental results in any case, right? So with segmental results, you'll know how each segment is growing. Going forward, we can share volume data, but so far we have not shared.
Okay. Sure, no problem. So I think with this, we come to the end of the session today. Thank you so much for taking time out. Anything you want to say as a closing remark for the audience about your company? Maybe something you want to share with them before we end the session.
Thank you so much, Ankit-ji. I mean, the only thing I would say is, of course, to thank everybody. But I missed your last question regarding risks. So the only thing that we're trying to do is we are transforming also into a very, very professional company. So I would like to leave that on that note, that each of our divisions is actually professionally managed. And that's something that I've learned from my father. Even our bulk edible oil business was entirely professionally driven. So that's something that we're continuing to do. And that's going to help us scale as well. So I thank everybody with that. I thank everyone for the time. and stay connected. Keep your interest in our company, and a lot of things to come. Thank you.
Thank you so much, Akshay ji, and thank you so much everyone for joining us and asking some really good questions.